The worksheet called My Savings Quest looks like this. You'll need to open it in DocHub, and it's pretty simple. And we're just kind of looking at you personally and something that you might want to save for and making a plan for how to do that using our SMART goals and the things that we learned in the Choose to Save slideshow. So the first part of this is my wish list. So the question asks, what are three things on your personal wish lists? And this can be anything of monetary value. So it could be something that costs $20, $50, $500, $5,000, whatever it is that is something that you don't have the money to pay for right now, but it's something that you would like to have. It could be an experience too, but whatever you want to put on there. And so you are going to fill out three different items. For example, I put maybe a new iPhone as something that you would want to save for in the future. And then so put the item in the box and then you're going to give it a monetary value. It doesn't have to be exact, just estimate. So I said that a new iPhone would cost about $1,000. I'm just estimating for your example purposes. So all three of those need to be filled out. Next page, you're going to talk about your current spending and some changes that you may be able to make. So three changes that you are willing to make. So don't just make up stuff, but something that you would be willing to make today to either your spending or to your income. So I give an example here of making coffee at home instead of buying it at a drive-through. So whatever it is that you could change about the way that you're spending your money, you will write that in this blank, and then you're going to say, what is the trade-off? What monetary value is this going to give me? In this case, if it cost about $3.50 a day and I get it 5 days a week, I would be saving $17.50 a week. So you're looking for a weekly amount because later on it's going to ask you for a weekly amount. And then what is that costing me? So I'm getting $17.50 a week. It's maybe costing me about 10 extra minutes a day having to make a pot of coffee, put it in a mug, whatever, add my things that I might want. So it can be something like that, something that you know that you don't have to spend money on, that you could give up, or it could be something that you could do to gain more money. So maybe you have some things that you could sell. Maybe, you know, clothes that you're not don't fit anymore or something like that you could sell to gain money. Maybe it's something that you could do as another part-time job or something like that. But whatever it is, you're going to give it a specific dollar amount as well, weekly dollar amount, or maybe it's a one-time thing. And then what is it costing you? Most of the time, it's going to cost you time. So you want to add that in as a trade-off as well. One thing I forgot to mention was that you're placing a star next to any items that are realistic. So things that if you write three things down here and you're really only willing to do two of them, put a star next to the two that you are willing to do. And you'll just go up here to where you see probably a check mark right there, and you can choose the star, and I'll show you what it looks like. Okay, so wherever you put the star, and you just click it right there. And then when you're ready to go back to typing, click on the pointer again. Another thing that I also forget to mention on the first page is that you are supposed to put a star next to the one item that you've chosen as your savings, as what you want to spend your savings on for the purposes of this assignment. So I would put that here on my new iPhone, mostly because it's the only one I put on there. All right. Then part 3. So we have some questions to answer, a little bit more in depth about our savings goal. So the first one, how much can you realistically save each week for your item? So if I chose to implement all three of the things that I listed in part 2, I'm going to add that up. How much money would I gain per week? Or if it doesn't work out per week, give a little explanation there of how much you could actually get out of that. And so with my one change here, I think it was like $630 over the course of a year that I could save up if I chose to make coffee at home rather than get it in the drive-through. And so that gets me a long way towards my $1,000 goal. And then hopefully I would have something else in these other two blanks that I could do as well to be able to save up for that item. The next one, what is your financial goal? So remember way back at the beginning of the semester when we did SMART goals, and I wrote here for your reference what the SMART goal stands for. So you're going to write a statement here. Make sure that it's specific. So specific just means that you are giving it a name. iPhone. I'm saving up for an iPhone. Measurable. How much money will it cost? And so we've already kind of done that part. We're going to say it costs $1,000. Attainable. And that is kind of what we were doing here. We were deciding that there were ways that we could actually come up with this money. So that is what makes it attainable. So you might say, well, I'll come back to that. Realistic just means that whatever you're trading off, whatever you're giving up, is not going to make you quit the goal. Giving up drive-through coffees isn't going to make you just a miserable person, and therefore you're not going to stick with it. So that's where you kind of evaluate that for yourself. And then time bound just means that you're giving it a specific end date. Will it take me 1 year to save up the money? Will it take 3 months? Whatever it is that makes sense for you and your goal. So you say that all in one sentence. So for example, I would say that my goal is to save up for $1,000 for an iPhone by giving up coffees at the drive-through and selling some clothes that I don't need anymore. And then I will have that money by 1 year from today. So just make sure that you include all those parts in your goal statement. And then the next thing is, what is one strategy you will use to make this saving process automatic? So remembering the notes yesterday or last time, automatic means you're either getting a payroll deduction, which means that your paycheck is direct deposited and your employer is depositing part of it in savings and part of it in checking. That's not an option for you. The other option is automatic transfers at your bank. So you can ask them to just go ahead and transfer over this $17.50 a week or whatever it is for you once a month. Probably would work better for the bank, but I don't know for sure that they wouldn't do that. And so if you can do that, that is the only other way to make it automatic. And then the last thing is to describe how your goal can be reached using the time value of money. And I want to go back to the slide from the notes to talk about what that means. The time value of money are these three things, just saying that if you want to maximize your return, you want to make sure that you're earning money on your savings, and so it's growing faster, that you want to save for as long as possible, save as much, as often as possible, and at the highest interest rate possible. So you might be able to, maybe this is a longer term goal that you have for 5 years. Maybe it's something that you're not planning to reach in the next year. And so you could actually purchase something like a certificate of deposit or put it into a higher interest savings account because you know that it's going to stay there longer. The other option is just to put a lot of money away at the beginning. That would be this one. Trying to sell off a bunch of stuff right away, and that's going to help you to save quicker at least. And then if you do put that money in a savings account, it's going to earn interest the whole time it's in there. And so that would be how you could maximize your return in that case. So it may not be all three of these things. You may have time on your side, you may have more money up front on your side, or you may have the option, to get a higher interest rate on your side. So that is everything.